The Fed's been operating its monetary policy while looking from the rearview mirror. They keep creating inflation by printing money quantitative easing, and they keep printing more and more money. And they look at the CPI, and as long as it's below 2%, they think it's okay to keep printing money. Meanwhile, they're ignoring the road ahead. The problem is they're going to raise rates enough to crush the economy, but not enough to slow inflation. And in fact, as inflation gets worse, that's going to be another drag on the economy. So what you've got to do is get out of all the bubble assets that were propped up by all the cheap money, because even though money is cheap, it may be slightly less cheap for a while, and that's enough to collapse the bubble. But you can't just go to cash because inflation is very high and it's eroding away the value of your cash. Bonds are even worse than cash. You're trying to value your cash up and inflation is eating it up. The balls were already in motion because we had this big increase in consumer prices in 2021. Prices were up 7%, maybe a little bit more during 2021. That would be the highest rate I think since 1982-ish, but if we still measured prices the way we measured them in 1982, we would have reported about a 15 increase in consumer prices, which would make it worse than any individual year during the 1970s or 1980. This was a horrible year of inflation and is really the beginning of the end because now the Fed can no longer justify 0% interest and quantitative easing. It needs to raise interest rates, and it's now talking about raising interest rates, and it may in fact raise them. But the problem is even the rate hikes they're talking about are too small and too late to make a difference. Because the Fed is talking about raising interest rates, we got 7% inflation. Rates need to be higher than the rate of inflation. If you want to slow the rate of inflation so interest rates need to go down, we can even get near 10% or 5%. We have so much debt because all of the past money printing. All the stimulus of the Fed, they have created a situation where it's impossible to fight inflation, and so they won't do it. And that's going to be the seeds of the next crisis because as the Fed is tightening up on its monetary policy to make it less loose, we're not going to have tight money, we're just going to have money that's less loose than it was before. The problem is less loose is not enough to sustain the asset bubble, so we get a crash. But it's not tight enough to actually bend the inflation curve, and so inflation is going to keep getting worse even as the Fed is hiking rates. To fight it, that's going to lead to stagflation that's ultimately going to cause the Fed to reverse course and start easing again, even though inflation will be worse than when it started its tightening campaign. Somewhere along the way, the markets are going to wake up to this reality and the dollar of the bottom is going to drop out of the dollar. And then we're going to have a currency crisis that will morph into a sovereign debt crisis. And then it's all over. Then we have a real collapse because then the Fed has to let interest rates go way up and everything comes crashing down in a much more spectacular way than in 2008, except nobody gets bailed out. Everybody has to suffer the losses in their entirety and they'll be much bigger, or they don't have the guts to do that and they just keep printing the money anyway, and they print the dollar into oblivion and we have hyperinflation, which would be even worse, so people have to go out of these risky momentum stock into value. What we're seeing is a massive shift out of US growth stocks to international value stocks in Europe stocks, in Asia basic businesses that have real earnings right now that pay good dividends. That's where investors are hiding out. That's why you're seeing some of these stocks up 10-20% on the year with no news, even as US tech stocks are cratering and all the bubble stocks including the cryptocurrencies, all that stuff is going down. There is no way to fight inflation without crashing the economy because it is built on the foundation of these artificially low interest rates. But in order to fight inflation, you have to remove that foundation, and then if you do that, everything built on top of it comes crashing down. Most when you think about a stock market, you're thinking about the entire market and index. As the dollar goes down, the value of that dividends will go up, and of course, the companies that I own, they're all raising their prices now. So they're going to be able to raise their prices, so they're going to have higher earnings and they can pay me higher dividends, so those increasing dividends will keep pace with an increasing cost of living. But a lot of Americans who are in the US stock market, they're collecting no dividends. They just have overpriced stocks that are falling, and if they have money in bonds, the low interest rates that they're earning are completely inadequate. They're being more than offset by inflation. If you're getting 2 or 3% interest and inflation is 7 or 10%, You're going backward every year, and eventually, you won't be able to afford to maintain your lifestyle, especially if you're retired. Bonds are riskier than stocks right now? I mean, it's unfortunate because bonds are where you're supposed to go when you want to play it safe, because you're not taking the risk of the stock market. You're guaranteed to get your money back. The person to who loaned you money is committed to paying you back, and you know what your return is gonna be because you have a fixed interest rate. But the problem is anyone who buys bonds now in this environment is overpaying. The prices are inflated because of the Fed, so you're paying this ridiculously high price for an asset that barely throws off a yield. Interest rates eventually rise and the price of bond collapses, but meanwhile, inflation is destroying the value of the bonds of the cash that the bonds are going to pay you. Bonds are extremely risky. One of the ways you know the stock is a good value, you look at the income. Just like when you look at a piece of property and you're looking for the cash flow, you're looking at what the rents are relative to the cost of operating it. If I own a business, I want to know what my piece of the profits is. What am I getting? What's my return on my investment? It can also be a potential appreciation if the company has enough income to buy back stock and deliver some of its income in the form of capital gains. Also, look at the earnings because most companies don't pay out all their earnings and dividends, so you are still entitled to a share of the earnings of the company when you're a stockholder, even if those earnings aren't paid out in dividends. But you look at all these valuations and you determine if that's a good place for your money. These assets are going to get increasingly more expensive for Americans as the dollar loses value. People have to act quickly while they can still afford to buy these stocks. The last decade was all about the US stock market. The US stock market outperformed the rest of the world because the rest of the world's got value stocks. We've got hyped up momentum and tech stocks, and so the world wanted those stocks. They don't want them anymore. They're getting rid of those stocks, and that's also a big problem for the dollar because we were recycling our trade deficits because foreigners at one point took the dollars they earned selling us stuff and they bought our bonds. But then, our bonds became so expensive, they started buying our stocks. There's nothing that we have that they want the dollar going to collapse, but in the meantime, we're getting into these foreign stocks. They're the ones that are going to do really well in this decade. Nothing that worked in the last decade will work in this one. This is stagflation, and the same thing with cryptocurrencies. If you bought Bitcoin at the beginning of the last decade and rode it up for 10 years, you cleaned up as well as a lot of these other cryptocurrencies. It is going to happen now if it's a rotation out of fool's gold into the real thing. So now it's time to take your profits in that Bitcoin that you bought a while ago because this is the rotation. It is out of the hype into value, and that includes out of cryptocurrencies into real money. It's all about value, and it's all about getting out of the dollar and protecting yourselves from a real economic crisis in the United States. We have delayed the day of reckoning for decades, and now as a result, the problems are much bigger, so we have a lot more to reckon with. It is going to be a very difficult environment financially in the United States. Think about the 1970s. Only way worse, much higher inflation, and a much weaker economy, and we're starting from a much more vulnerable position. The political landscape is far scarier now. Socialism was not acceptable in the 1970s, and most people would not vote for socialism. Now, people embrace socialism.